Hello everyone. Welcome to this episode of CoinW Academy's educational video series. What are Fed rate hikes and shrinking balance sheets? How do they impact the finance and cryptocurrency markets? Let's get started. The Federal Reserve is the central bank of the United States and is responsible for formulating monetary policy. An interest rate hike refers to the Federal Reserve raising its benchmark interest rate, which can cause the cost of borrowing for banks to rise, thereby affecting the interest rate level of the entire economic system. Balance sheet reduction refers to the Federal Reserve reducing the scale of its holdings of bonds and other financial assets, which is actually a reversal of quantitative easing policy. When the Federal Reserve raises interest rates, the cost of borrowing for banks may increase, which may lead to an increase in interest rates for loans to businesses and individuals. High interest rates may suppress business investment and personal consumption and have some impact on economic growth. In addition, interest rate hikes make the U.S. more attractive, attracting overseas investors to buy U.S. bonds, which may result in capital outflows from other countries. Balance sheet reduction policy means that the Federal Reserve reduces its holdings of bonds and other financial assets. This will increase the supply of bonds on the market, thereby pushing up interest rates. High interest rates may increase borrowing costs and have an impact on the stock and bond markets. In addition, balance sheet reductions may lead to a reduction in market liquidity, which in turn affects the operation of financial institutions. Interest rate policies often lead to the appreciation of the US dollar, which means that the prices of other currencies, including cryptocurrencies, against the US dollar will decrease. Secondly, the purpose of interest rate hikes is often to curb inflation, which means that people will adopt more conservative investment methods to preserve more cash to cope with the sharp increase in living expenses caused by inflation. In the short term, interest rate hikes may render more bearish sentiment, but in the long run, they cannot affect the institutional judgment that Bitcoin and the cryptocurrency market are long-term bullish. By now, everyone should be familiar with hikes and balance sheet reduction, right? Follow CoinW Academy English on Twitter to learn more about professional cryptographic and financial knowledge.